Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes dull, but often telling world of corporate filings. Today we're diving into ALT5 Sigma Corporation's annual report, and let's just say it's a mixed bag. Get ready for some twists and turns as we explore a company trying to navigate the wild world of Fintech and Biotech, a combination as exciting as a caffeinated sloth race. First, let's set the stage. Back in July, the company's stock held by non-affiliates was worth about $26.7 million. Fast forward to March of this year, and they have a little over 16 million shares of common stock outstanding. This sets the scene for understanding the overall scale and market perception of ALT5 Sigma. ALT5 Sigma is trying to ride two horses at once, the high-speed race of fintech with blockchain tech and the marathon pace of biotechnology with pain management drugs. It's a bold strategy. Let's see if it's paying off. A key event this year was the acquisition of ALT5 Sigma Inc., a fintech holding company. This acquisition seems to be a big part of the company's strategy, bringing in new financial services and fintech capabilities. Here's a quick tour of how this company is put together. ALT5 Sigma Corporation sits at the top, with a key subsidiary, ALT5 Sigma Inc. Below that, you've got ALT5 Sigma Canada, which has a bunch of smaller subsidiaries focusing on things like AI, trading platforms, and even a crypto exchange license in Lithuania. The company claims to be following four important rules: safety, security, and trust, accessibility, regulations, and transparency. This seems like an attempt to reassure investors and the public, especially in the volatile world of cryptocurrency and finance. ALT5 Prime and ALT5 Pay seem to be their main moneymakers. ALT5 Prime is for buying and selling digital assets, while ALT5 Pay is a crypto payment gateway for merchants. The fact that they deal in multiple currencies is a sign that they're trying to reach a global market. ALT5's products seem geared more towards institutions rather than regular retail investors. They believe that financial institutions will license their technology to keep their customers from jumping ship to crypto investments. Now, the projections ALT5 believes a significant chunk of money will move from traditional stocks to digital assets in the next few years. They envision a world where broker-dealers handle most of the digital asset trading, potentially leading to trillions in annual trading volume. The company also thinks there's a big opportunity in crypto payment gateways. This is the tech that lets businesses accept crypto payments. They've outsourced some sales and plan to market through conferences and direct mail. Their main targets are the US and Canada, but they want to establish partnerships in Europe and Asia. ALT5 Sigma generates revenue through three main line items: installation, sec fees, monthly maintenance fees, and transaction fees from 0.25% to 5%. Right, let's get to the part that everyone cares about, the financials. This is where things get interesting. Over the years, their transaction volume has gone from 39 million profit, we get $20. Now looking at their corresponding consolidated revenue and profit, we get 2020 had primed $4 million in net profit. They had great revenue and profits in 22 and 0 win. Buffett, we get 2020 had primed them 4 million net loss. 2021 had Cavret went 2023 had $3.4 million in net profit. They had great revenue and profit, $3 million. Behind dollars modded one from 3 million net lost. 2021 had 12.53 million net loss. 2023 had $0.5 million in net profit, and 2023 had $3.4 million in net profit. They had great revenue and profits in 2023. So let's look at what happened in 2024 head. They are boasting a $8.8 million increase in revenue. This is definitely thanks to acquiring ALT5 subsidiary in May. The gross profit followed closely with the revenue increase, being $6.5 million greater. But watch out, operating costs shot up by $7.6 million. This was due to acquiring ALT5 subsidiary and to increase spending. On the flip side, during 2020-2023, they took a big hit from what is known as impairment charges. Basically, some investments went sour and they had to write them off, resulting in a whopping $19 million hit. This didn't happen in 2024, which is good news. Jumping to the biotech side, the company acquired Soin Therapeutics, a company focused on the development of a novel formulation of low-dose naltrexone epsel-dienhand for the treatment of chronic regional pain syndrome. CRPS, their lead candidate, is AN104A, a novel formulation of 2.0 milligram of LDN for chronic regional pain syndrome, and the CRPS for chronic regional pain syndrome. They have quite a few plans in place to get approval, including using phase 1 and 3 clinical trials. The second candidate is YA901 is designed to treat diseases associated with poor vascular function. If they get FDA approval for their products, they intend to outsource the manufacturing and rely on marketing to physician subspecialties. Here's a red flag. The report discloses material weaknesses in their internal financial controls. This means they have problems ensuring their financial data is accurate and reliable. There is also a risk that if the volume of digital assets or demand for trading them declines, the company would be in trouble. There's a lot of competition from other platforms. Because they are dealing with crypto, cyber attacks, and security breaches are big risks, a successful attack could really hurt their brand, cost them money, and bring down the wrath of regulators. The fintech world is a regulatory minefield, and ALT5 Sigma operates in multiple jurisdictions with potentially conflicting rules. This could lead to big fines and business restrictions if they're not careful. Unfortunately, cyber attacks are increasing across all industries and can impact companies and cause many of the aforementioned issues with financial issues. Finally, complying with the many applicable rules and regulations depends on the company's ability to have a strong compliance department. There may be some good news in sight. There is board and management oversight when it comes to IT infrastructure and security. Hopefully they can stop any cyber attacks before they happen. This company also has been experiencing legal problems, so make sure you check out those details before investing. So what's the verdict on ALT5 Sigma? It's got potential, especially with its focus on blockchain-powered fintech solutions and novel pain treatments. But as the numbers show, it's not a smooth ride. High operating expenses and the challenges in biotechnology are clear weaknesses. As for that board, they need to get those internal controls sorted out ASAP and stay laser focused on compliance to navigate this uncertain regulatory landscape. Overall, ALT5 Sigma is a high-risk, high-reward play. They are hoping for a lot of potential growth in the market, but it's up to the executive team to perform and deliver. Thanks for watching, and if you found this breakdown insightful, don't forget to like, comment, and subscribe for more corporate deep dives.